From funding gaps to fragile supply chains, can smart investment and policy innovation finally scale Africa's healthcare sector and close the care gap for millions? Good morning and welcome to another power-packed episode of Business Week. This past week, Wall Street lost a jaw-dropping, over the past 3 weeks, $5 trillion, while the Fed is standing still on rates but sliding on its growth outlook, and Japan's inflation is heating up, stoking talks of rate hikes. Meanwhile, PepsiCo is fizzing into the wellness game, buying prebiotic soda brand Poppi for nearly $2 billion. And here at home, Nigeria's inflation cools ever so slightly to 23.18%, but price pressures remain. In our deep dive, we're asking, can Africa's health tech revolution deliver at scale? We'll unpack the realities and opportunities of investing in innovation that actually saves lives. If you missed the big stories this week, don't worry, we have got you covered. Rhoda Sodiri standing in for Rolake Akinkabe-Fulani. Stay tuned. All right, let's begin with how the markets fared this past week. We'll start with commodities. Brent crude, 71.74, a weekly change of about 2 percentage points. We did see oil rising on geopolitical concerns and also, well, the fundamentals, but mostly with a possible partial ceasefire between Russia and Ukraine. Traders thinking, well, that means we might see Russian barrels, coming into the market. And then on the flip side, Middle East tensions, missile strikes on the U.S. into the Houthis in Yemen. That, of course, raising concerns about barrels being taken off the markets. Then you got West Texas Intermediate, 67.90, up by 1.3 for the week. Natural gas, 3.96. RBOB, $2.19. That's their picture for the commodities. Now, Nigeria. All-share index at 104,962 for the week, about down by 1%. We saw a number of, some volatility during the week on the all-share index. As far as the deals are concerned, 10,099 of them. We saw about 10 percentage point change there. Volumes about 397 million, 16 percentage points up there. As far as value is concerned, 14.17 billion, and the market cap at 65.8 trillion naira for the all-share index. Other markets in Johannesburg, we had a 1.8 percentage point increase for the week, 89,518. We saw, I think, some commodities stocks rising over in Johannesburg during this past week, as well as banking stocks. In Ghana, up by 1.06%. And then we've got Nairobi and Morocco, 52 basis points and 600 basis points climb for each of those markets during the week. Emerging markets doing better than the developed markets. So your Pan-European Stock 600 index. The European markets this week did, see some weakness. There were a lot of central bank decisions in the region. Russia held rates at about 21%. We did see Switzerland cut rates, citing a number of macroeconomic indicators pressuring the Swiss National Bank, the SNB, to reduce rates. You saw the Bank of England hold rates in place. Who else held rates in place over in the euro area? CAC 40 France, that was up. IBEX 35 up as well. But you did see the markets coming off their highs, particularly defense stocks. You had the debt break agreement over in Germany. And we're going to be expecting, in fact, this coming week, we'll be looking at Rachel Reeves over in the UK. And, Sweden, that's what I was trying to remember. Sweden also held rates in place. And then, of course, a number of other things coming up. So Europe, interesting picture there for this past week, volatile rather. And then we get to Wall Street. The Dow Jones Industrial Average coming off a prior week of losses. In fact, the markets had worst week in about 2 or 3 years. This is coming into this week now. Dow Jones Industrial Average 1.2% change gain there. S&P 500, I always repeat this, 5,667 points. At one point, S&P 500 was up by 6,100 points, major high there. And then the NASDAQ, the tech-heavy NASDAQ, 17,784. Mag 7 stocks pushing up the NASDAQ, the likes of Microsoft, Meta, although Tesla, though, down by 40% for the week. So interesting picture there as far as the markets are concerned. That's it for the markets. We got more coming up. let's take a look at some of our other top stories from around the world. Had trillions of dollars lost in the U.S. market as a result of the U.S. S&P 500's sharp drop from record highs into a correction zone. According to FactSet, S&P 500's market value peaked February the 19th, 52 trillion. The market value of the index dropped about 46.7 the following Thursday. And in about 3 weeks, that amounts to about a total loss of roughly $5.2 trillion. In a widely followed decision Wednesday, the U.S. Federal Reserve maintained the line on benchmark interest rates while indicating that rate cuts are probably in the works for the remainder of the year. But even that's a little shifty due to urgent worries about how tariffs may affect a faltering economy. The Federal Open Market Committee, FOMC, which sets interest rates, maintained its key borrowing rate target, 4.25 to 4.5% range, which it has maintained since December. The two-day policy meeting this week had been priced in with almost no likelihood of a shift. All right, Bank of England, the UK economy is struggling with potential domestic stagnation and uncertainty around international trade. Against that backdrop, Bank of England kept rates unchanged Thursday. Central Bank maintained its benchmark rate at 4.5% in a much-awaited decision. The Monetary Policy Committee of the Central Bank decided 8-1 to keep things in place. Now, there's a single MPC member supported a 25 basis point cut. Poppi, which is supposed to be a healthy soda brand, is going to be purchased by PepsiCo for $1.95 billion. The company announced this on Monday. That's Pepsi. The agreement has a net purchase price of $1.65 billion when you back out $300 million in cash tax benefits. The notification states that PepsiCo will pay out more money if Poppi satisfies specific performance requirements. Mentioned this earlier, German lawmakers passing a giant defense and infrastructure investment package proposed by Chancellor-in-Waiting Friedrich Merz, following concern over the U.S. stance on the Ukraine war and Europe's security, i.e., Europe should stand more on its own. Lower house MPs voted by a margin of 513 against 207 for what has been dubbed a fiscal bazooka worth hundreds of billions of euros, which required a relaxation of the debt brake enshrined in the Constitution. Can't spend over a certain amount. Over in Japan, Japan's core inflation in February, 3% above forecast and supporting the argument for additional interest rate increases. Now, according to economists surveyed by Reuters, the core inflation rate, which does not include the cost of fresh food, was lower than the 3.2% rate in January, but higher than the 2.9% forecast. After hitting a two-year high of 4% last month, the headline inflation increased 3.7% year on year. In February, indicates that for 35 consecutive months, the headline inflation rate has been higher than the Bank of Japan's 2% target. More inflation news, but this time Nigeria. Nigeria has decelerated to 23.18% in February from 24.48% in January. This according to the National Bureau of Statistics. In its latest report on the Consumer Price Index. Now, the statistical agency says the headline rate in February eased relative to January. On a year-on-year basis, the headline inflation rate was about 8.52% lower than the rate in February of 2024. Before the rebasing, that was 31.7%. Furthermore, on a month-on-month basis, headline inflation in February stood at 2.04%.